Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 8th, 2010. Now our first position for tonight, we're going to look at frozen pork bellies. What we're trying to do here is move us far away from some of the market volatility that's happening right now in the commodities and the equities and some of the currencies also, because I think we're going to see some pretty wild swings here in the next couple of days. So what I'm looking at right now is the frozen pork bellies is our first position. Now we do have the triple EMA crossover that has just recently crossed over to the downside. However, I see some potential for some opportunity in actual counter trend positions. Now, the reason I'm looking at this specifically is the predicted medium and long-term differences right here at -4, heavily oversold territory. Predicted MACD and predicted true strength indicator have further room to extend, but the predicted medium and long-term differences from vantage point can be very powerful indicators from the sense of whether something is overbought, whether it's oversold, and the overall strength of that trend. So what we have here is I have this up on a 3-month time frame. Everybody can see that okay? What we're going to do now is we're going to switch this back to a 6-month time frame so everybody can see this. Now the last time the predicted medium and long-term differences were at -4, this is what I want. I'm always looking for price patterns and things of this nature from the Vantage Point software to give me an early indication of a trend reversal. So in my opinion, looking at these frozen pork bellies, I think we have that forming right now. Now, right here, just in the beginning of February, the medium crossed the long-term difference in the exact same place where it is right now. So hopefully everyone can see this okay. This pink line is the medium-term difference. It's now gone flat and it's running completely horizontal, and it's getting ready to break higher, which tells me that the frozen pork bellies are so oversold that we're going to get a substantial move back to the upside. Now, another thing I want to point out here, looking at price patterns, again, a very similar thing. We had a triple EMA crossover took place, still accurate from vantage point, where it crossed here to the downside. Now, again, right here, we can see when this medium and long-term differences, predicted differences, started to break higher, we can see right here what happened. The frozen pork bellies went from the 81 level all the way up into the 110 level. Now, predominantly this trend in frozen pork bellies is up. So we've got this what looks to be a corrective move down to the downside, and I think the move to the downside is going to be very limited here. So with that said, pointing all this out, let's go into the daily report here, because I think it's important. We're looking for the predicted high and the predicted low for tomorrow. Now, this is counter trend. We want to make sure we're taking profits. However, again, looking at these differences at -3.7, -3.7, -1.9, heavily oversold here. Neural index is still down. Now we've closed at 97.80 for tomorrow. We've got a predicted low of 96.55 and a high of 98.60. So with this close of 97.80, what we're going to be doing is looking for a pullback towards this 96.55 area, at which point we want to enter into counter trend long positions. We do not want to load up on a whole bunch of contracts here. We want to start with a few contracts and begin to build our counter trend position based on the analysis that I've done here today. And again, this all suggests to me that the frozen pork bellies in potentially the next few days are going to make a dramatic move back to the upside. That may only be corrective in nature, but again, looking at that chart and from what I'm seeing using the Vantage Point software, there could be a very aggressive move back to the top side. So we're going to use this opportunity. Our stops on the frozen pork bellies, we're going to have them, I would say, to be safe. We're going to be entering in the 96.55 area, so I would like to see the stops pretty much in the 93 to 94 area to give this trade at least a chance to develop. And your longer term traders, your position traders, they're going to have their stops more down in this 85 to 86 area. So that's our first position for tonight. Now let's go into the foreign exchange market and see what's happening over there. Now, our second position for tonight, we're here in the foreign exchange market now. We're looking at the dollar-yen currency pair. We can see that the triple EMA crossover is trying to make this cross to the top side. It's definitely having trouble, but I still see some opportunities in longs in the dollar-yen pair despite the equity weakness. The reason I'm saying that, again, down here we've got the predicted true strength indicator from Vantage Point crossing over to the upside in heavily oversold territory. Predicted MACD also supporting this position. Our predicted medium and long-term differences are still in positive territory, sitting at the positive 50, which in short is somewhat trend-ready levels. We're not overbought, not oversold, so I like where that's sitting. The strength indicator here is turned negative. That is definitely a concern, as is the current situation of the equity markets. But again, for building longer term, for medium term to longer term positions, dollar yen definitely has some opportunity. So let's go into our daily report and have a look and see what we can see here. We have 90.76 is our low, 92.20 is our high. So 90.76 is our target area, 96, 90.80, 90.82. We want to get into our buy positions. Again, the short term has turned negative. That would suggest the short term crossover has also crossed to the downside. But again, very short term indicator. Our medium and long term differences are still holding in there in positive territory. Neural index is down. Neural index again, 24-hour indicator. I'm not too concerned with it right now, but it's certainly an issue if these equities continue to push aggressively lower. So if they do, that will push the dollar yen lower. Now, probably a good idea here now to